Hello, ladies and gentlemen. Thank you so much for attending our webcast today. We're going to give this a few minutes so that Zoom can allow everybody in to attend today's webcast. My name is Michael Corselli. I'm the chairman and founder of FLYA, 501c6 nonprofit dedicated to delivering the best alternative investment opportunities available in the marketplace today. I'm very grateful to have on our webcast today Greenflame. You guys are going to love this play. But while we do that, I just want to give people more of a chance to actually log in and get situated. Today, we have Stephen Bile and Jeff Bennick, both experts, both part of the management team at Greenflame. They'll be getting into their background. They'll be getting into, what value they add to this deal, to this transaction, which I find to be extremely timely and an amazing expression of the geopolitical, global macroeconomic trends that are playing out in not only ESG, but oil, and international global oil markets. So I think, guys, that this is a perfect opportunity, to speak on this. And I really appreciate you coming today to speak to our audience, to our members of FLYA, and to the people at FLYA. Thank you so much for your time and attention. We really greatly appreciate that. So with that, I'm going to turn it over to Jeff Bennick. Jeff, kick it off.
Thank you, Michael, and thank you to all the attendees. We're really excited to having you here and listen to our story. We think this is a tremendous opportunity for a number of reasons. Primarily, we think that we're in a bull cycle here in oil, and Stephen's going to talk about this great opportunity. But we have a great asset that we own and a great management team to support this great asset. And we're really looking forward to you folks climbing on board early on this story, as we think that timing is perfect, especially to create some value here for everyone that's joining us today. And we're super excited about that. The other part of this too is that, there's a whole ESG component to this opportunity as well, that we're really not factoring the economics, but it's just going to be just a great value add to this opportunity. And you'll probably hear about this in our business plan for 2023 as we start to unfold and capture in the whole ESG opportunity with Greenflame. So I'm really excited about this. As I mentioned, we got a great team here and a tremendous asset. And with that said, I'm going to hand the keys over to Stephen now to talk about Greenflame. And Michael, if I'm correct, we'll probably take some questions at the end if there are any.
Yeah. So Jeff, I would just like to tell people that there's a chat function and there's also a Q&A function inside of the toolbar. So if you have questions that you would like to ask, just pop them in there and we'll get to them. And as many questions as we have, we'll take the time to answer them and make sure that we get into really good detail. Okay, so use the Q&A and the chat functions, and we want this to be as interactive as possible. So I'll turn it back over to Stephen.
Awesome. Okay, Stephen.
All right, thank you very much. My name is Stephen Bile. My day job has been that I'm the CEO of a company called Valcor. We are a project development company, and this is one of our premier ones that we're doing. I'm also the CTO of Greenflame. This project is in Trinidad and Tobago, on the southern end of the island, up near Venezuela. This one we think is quite an opportunity because the southern end of the island there is basically all heavy oil and oil sands. In this particular one, we were able to be at the right place at the right time to secure an 80 million barrels of oil in place reserve there that has shallow wells, about 1,000 to 1,200 feet. There's 110 wells already in place. And we have the reserve report with an updated one coming that shows that only about 500,000 barrels out of the 80 have been produced. And so it is ripe for doing something with. We also have done all of the background on this. We have re-entered most of the wells. We have tested stimulation. We've tested all of the sand control products and everything else. So we are right at the point of being able to ramp. And that is the purpose of going out and seeking money, is that we were going to do it right at the beginning of COVID, and then we were locked out of the island for some period of time. And so now we are full steam ahead to do this. The equipment is generally already there. We have a steam generator. We have access to CO2 for the injection. And we have all of the other components ready to be shipped. So the timing is extremely good, because an ordinary project, if you're trying to take advantage of the high oil price, would give you a situation where you might be a year away from production or more. We have everything, as I said, everything in place. We have pre-drilled wells. We have all of the stimulation equipment already there. We also have pumps, pump jacks. We have a tie-in to the pipeline there in going to Heritage Oil, which is the national oil company. And there is an offtake, guaranteed offtake for all of our oil at WTI with a small offset. Right now it's WTI minus about $5 with a 50-cent charge for putting it into the pipeline. So all we need to do is kick this thing off and start ramping them up. The process that we're using for this is it's a heavy oil. And the reason why there's been so little production on this field so far is that they just use conventional methods. Once they open up the well and started pumping, it would pump, say, 10 barrels a day due to the high viscosity. And then it would tail off over the years down to about 2 barrels a day. So there's current production somewhere just under 200 barrels a day without doing any stimulation. And as you re-enter each well, though, we inject primarily steam to get heat down there. We have access to water. There's an on-site water well with no significant limitations on how much water we can take from that. We have the water treatment facility that's already there, and we inject steam down. The other thing that we're adding is we have a CO2 component, and this leads into the ESG side. For our purposes, we were lucky enough, we were quite close to a natural gas plant that has an amine unit that throws off an awful lot of CO2. And we have an initial agreement to take 10 million standard cubic feet a day of CO2 from them for use in injection in this field. With normal enhanced oil recovery like this, about 2/3 of what's injected stays downhole. It spreads out into the field, and about 1/3 comes back with your oil. So one of the other things that we're doing here that's not the usual is we're using a closed loop system. So we'll bring up our oil and we will intend to send it through in a closed loop where we recapture any gas that comes back and for re-injection. So there'll be 100% sequestration, which gives us the opportunity, due to the jurisdiction being under British law, like that we could seek carbon credits in the near future. So in that process, we'll be both injecting steam for heat and CO2 to increase overall pressure. Also, the CO2 gets absorbed by the oil, some amount of it. Both of those things tend to make the oil less viscous and the flow rate much faster. We just came off of a 6-month optimization process where we did simulations on it and demonstrated what we already knew, is that you can get extremely high flow rates back once you've done this. So you can take a 2 barrel a day well, and in our previous experimentation, we'd gotten more than 100 barrels a day back without even pumping. are ready to move forward with those things. The only difficulty we had when you get such a large kickback is we needed sand control, and that's the other thing that we're putting in place. So all these wells will have sand control in there to prevent that pushback and choking it off with sand. And so we expect that these would be hit about every 6 months for a 1 month period of enhanced oil recovery where we inject steam and CO2. And then we would have a 6 month window where you would have long-term production when you're seeing it start to trail off at about the end of 6 months and then hitting it again. And then for long-term, what we're doing is we plan to do this 6 times, so over 3 years for each well, adding more and more wells as we move forward. And then we'll go to a long-term injection program where we pick the best wells based upon all the data we have from production for injection, and we start long-term steam and CO2 injection into those, and then the other ones just stay as producers. And that gets us the long-term drive and increase on this field that we think we can safely get to, many thousand barrels per day for a sustained production run. And we should be able to recover more than 60%, potentially 80% of the oil in place. So it's quite a good project. We have this particular field. The reason we picked it is it's on the highest point on the southern end. So the wells are the shallowest, and also there's a tendency for the oil to move up to its highest point. So we have this one as our premier one, but on the southern end of the island here, there is thousands of other wells. We've already spoken to a couple of the local ones, and there's 3,000 other wells that we could do this process on once we demonstrate it to them. And so we have an expansion opportunity as well. The final thing we should discuss on some of this is the jurisdiction in Trinidad, like as I said, is quite good. We've been with them for several years, starting pre-COVID, and the Heritage Oil, we were there through the transition from when it was originally Petrotrin through to Heritage Oil. There was never an interruption in payment. They always pay within the first 10 days of the month, exactly on time. We've never experienced a single late payment or underpayment. Even when they shut down their refinery and went to an export model, there was no interruption in payment. So we've had nothing but good experiences. We don't have any problems with permitting, and we are ready to go immediately. And the idea would be that this is a pre-IPO opportunity. So we're letting it in at a low valuation, which will obviously change as soon as we start this up, because we'll have rapidly growing production, and which would take us through to the IPO.
Excellent, Stephen. And I have David Kahn, our CEO, on here as well. Love to David, if you want to add anything here, David, that'd be amazing. So there's a comp on the island right now, a company called Touchstone. So they're trading at about $300 million market cap. So we think that we're really, really sharply priced here at a 25 million pre-money valuation. And we truly think that there's going to be a tremendous amount of upside here for the folks that get in early, and the folks that see the opportunity to come in. Last but not least, before I let David say a few things, is that we have all everything in line for a RTO sometime in October. If not, latest would be November. So we're working towards that date. And look, we're super excited at this opportunity, and we think that those that get in will be rewarded and seize the opportunity. So David, over to you if you want to add something.
Sure, absolutely, Jeff. Thank you very much. Steve, very good job. Thank you. Ladies and gentlemen, first of all, I want to apologize for my voice. I've been traveling quite a bit, so I've lost it a little bit here, but I'll try my best. So what I'd like to emphasize, again, as Steve adhered to, was that Trinidad historically has been a very well-known jurisdiction that is safe within the Commonwealth, and very much both tax, title, everything is very much understood. So although it's in the Caribbean, really from a government point of view, from a jurisdiction, it's a very safe jurisdiction. It really was historically one of the major assets for Texaco, both in the 70s and 80s. And via Texaco, we were able to achieve almost 175,000 barrels a day for about 25 years. A large component of that was steam, and in fact, several thousand wells were drilled, and the goal was to expand to about 500,000 barrels a day. With Texaco getting purchased or merged with Chevron, that production rapidly went down because of the lack of expertise. And really what we're doing is we are renewing or restarting the original Texaco work that I was part of in the 90s, to where we are now going in back with better steam generators, better, but evolutionary technology, not revolutionary. And with this, the CO2, we're able to enhance this. What is critical, what has changed in the last 20 years is, number one, oil prices have definitely become a lot more robust. And because of the issue of Venezuela, Mexico, Canada, there really is a shortage of heavy oil in the US Gulf Coast. And because of that, the differential is very low. And in some cases, Steve, it could be even higher than WTI. Is that correct?
Excuse me, I was on mute. That is correct. We have done several things to maximize our potential revenue on this oil. Right now, we have a guaranteed offtake from the local government, which has been standing for decades. And so it's quite a lot of stability, but we have the opportunity, if we wish to sell otherwise. And we are starting a trial this first of next year with one of the large shipping companies to look at selling it as a lighter fuel, which is at a WTI almost plus 50% as a possible Caribbean bunker.
Absolutely. So, ladies and gentlemen, for your edification, what this means is that the offshore bunker fuel market now needs a low sulfur oil. We have that capability to provide a low sulfur oil, and there's a short in the market. So once we get to large enough volumes, we can sell to the offshore market. And that would give us, because it's clean, it's lower CO2 footprint, the ability to sell it for a premium market. The other part of this that's exciting is although often many of us think of Trinidad as a country that sells sugarcane, what have you, it is actually the 6th largest LNG producer in the world. So currently produces about 1 million barrels a day equivalent of gas, which is mainly shipped and not used domestically. And because of that, our natural gas price locally is so cheap to where our operating cost for fuel for steam is sub $10. So what I tell you, all you people, is that we have an operating cost and a CapEx all in. Our cost of production is less than $25 per barrel. So what that means is that although we are currently at a $90 world, we've done our economics at 75, we as a project can survive providing dividends as low as $30 a barrel. So what the model of this company is to not drill any new wells, to work over wells on a consistent basis, provide a nice dividend cash flow to all the people, and allow ourselves to continue growing from 100 wells to over 1,000 wells. Our goal in 2 years is to finish our current project, get to 5,000 barrels a day, and then to expand with our good relationship with the local operator to the next 3,000 barrels, 3,000 wells. And we believe that this could be a tremendous dividend machine at very low royalty tax rates, which are promoted by the government, and allow ourselves to be a 25 to 50,000 barrel a day company in 5 years, providing a great amount of dividends to the investors. One of the questions that I saw was the issue of CO2. In fact, the government has been highly supportive of this because the country currently is the 2nd largest producer of CO2 emissions in the world. So they're actually promoting it, providing EOR benefits, great tax benefits, and it's a major issue for the country now. to actually put this into the ground in any case. Really what the country is doing is it's trying to duplicate what Exxon and these other people are doing in Guyana. And we believe we are in the same type of geological thrust and can duplicate that, but via EOR. Steve, anything else? I've lost my voice.
No, that's no problem. Yeah, the one point that should be made is the government's also extremely reasonable. Their total effective royalty rate is 16% for this field, which is right around the average for the US states as they do. And their withholding is generally below most international tax rates. And they have treaties with the United States and of course the UK and Europe to avoid double taxation.
Stephen, can you just, and David, can you both just give a little bio about yourselves, your background? Because I really think not only is this asset tremendous, but the management team is just unbelievable. So Stephen, over to you. If you could just give a background about yourself.
Yeah, I'm originally an engineer in the offshore oil business, is where I started out, and then started a company which is in the onshore business. I also am an attorney. I was a patent attorney originally, and left that to start my own companies. My first company grew to 16 through merger and acquisition and the like. I merged with a company called Dockwise, which used to be quite famous. It's now merged in with a much larger international conglomerate. We were 1,600 employees, reached over $500 million in revenue, and $230 million in EBITDA. Since that time, myself and my other partner in Valcor have started 2 other companies that have exceeded $100 million in revenue, and several others. We currently have production here, and we have production in 3 other locations in Utah, Turkey, and we did have production in the Ukraine, which we hope will restart in someday.
Great.
David, how about yourself?
Absolutely. Ladies and gentlemen, my name is David Kahn. I have a PhD in reservoir engineering, was for a number of years early on in my career with Texaco, primarily in their M&A and project analysis group, looked at pretty much all unconventional heavy oil, shale gas, CBM properties globally. The key about what we were focused on was absolutely no geological risk. So my goal in life is to go after projects which have no geological risk, and how do we exploit them more cost effectively, and how to increase the recovery factor of these reservoirs. After Texaco, I went to a trading company called Enron for a few years, then to Credit Suisse for different energy technologies. About 20 years ago, decided to go on my own and started doing the same thing. Picking up unconventional assets in good locations like West Texas, Utah, other places where really the price of oil had escalated, good fiscal terms, and low drilling. We tried not to drill very deep wells, so keep control of our cost, and built some companies. My first company with the Lundins was called Black Pearl Production, built that to about 10,000 barrels a day. Moved to the Middle East to do a similar heavy oil company doing 26,000 barrels a day called Tanganyika, and then realized as I grew these companies that the biggest weakness was we did not want to go to third-party service companies to do facilities or control our destiny and our cost structure. I met Steve Bile about 7 years ago. We decided to join forces to where I brought the downhole knowledge and Steve brought the operations, the logistics, and the facilities component to many of these projects. And the marriage to date has been, let's put it this way, more successful than my 3 marriages.
Got it. So on that
Sorry.
note, go ahead, David.
No, I see Steve smile a little bit here, so.
So on that note, Michael, I'm not sure if you see it. Are there any questions? Anyone want to ask any questions?
Yeah, absolutely. There's actually a bunch of questions. So gentleman's asking about the API of the oil.
David?
Steve, you want to handle that? It varies, but you know it pretty well.
Yeah, the API of the oil is varies from well to well and within the same reservoir. It goes from a high of about 18 to 20 to a low of about 12. It has the consistency of sort of pudding, I would say, in most cases. And that's
But Steve, but I do want to emphasize, even the heaviest stuff at 12 API, because the geological gradient out there is so high, even the 12 API oil at a depth of 1,200 feet, which is about 94 degrees Fahrenheit, the maximum viscosity is only about 3,000 centipoise. The permeability is about 2 Darcy's. So it's quite mobile, even the most viscous stuff.
unlike most heavy oil, it's pumpable at room temperature. So it can go directly into a pipeline. Whereas in most other places, the heavy oil, yeah, it is far too viscous to be able to pump.
It has a tremendous amount of paraffinic nature there, which we can overcome. And then there's a huge amount of gas oil ratio in there. I think it's about 400. So it's quite mobile, even the heavy stuff.
And what's the sulfur in it, David?
The sulfur is below, our stuff is below 0.5%. So it meets the standards for offshore bunker fuel market, what we call low sulfur diesel or bunker fuel.
Got it. So there's a question that I saw on the per well economics. Can someone answer that?
The cost per well is dominated by the heat input. We do every 6 months that we hit it with steam and CO2. And so that runs about $12 to $15 per produced barrel. And then there's a very small incremental cost for pumping it out. Beyond that, there's no additional because we don't have any transport costs. We don't have anything else that's significant. It goes directly into a pipeline after it goes across our weir to remove water and through a heater treater to remove the solids. So it's definitely below 25 and typically below $20 a barrel. And we're also, since there's very limited money being input here, we're putting in somewhere in the range of $80,000 per well of infrastructure. That's gives us the pump, the drives for those pumps, the sand control, rods, tubing, everything else. So the return on that is, hard to even calculate. It's a very large return per money put in.
Now, Steve, because of our previous investment, we do have quite a bit of that equipment already in the field ready for deployment. Is that correct?
We have all the outfitting for 20 wells, plus the steam generator, plus all the other infrastructure we need for CO2 injection. Yes.
And this is what's critical, is that really once we achieve like 500 to 1,000 barrels a day, really, which we believe will be about 15 wells, really the company should be cash flowing positive and organically be able to throw off enough money to self-fund the project.
That is correct. Yeah, obviously the return rate on these is, several weeks on the return in order to give us enough money to put back into additional wells. The only thing we have is sort of incremental steps as we need to add larger infrastructure, such as additional steam generators. But all of that can be self-funded after entering probably 10 to 20 wells.
That's correct.
There's a question on ownership structure and how much are we looking to raise. So I'll answer the question on what we're looking to raise. 2 to 3 million USD gets us to about 500 barrels per day. And we'd like to do the RTO, the Go Pub in October, November at 500 barrels a day. I think that gets us a really, really strong valuation and a lot of value creation for all the shareholders that get in at this round. We think it's very achievable. David, if you want to comment on that in terms of our strategy to get to 500 barrels per day, over to you.
Okay, I was hoping you would say Steve because of my voice here, but no, absolutely. The reality is all we need to do is we've got a number of wells already producing. We have tested in the past when we put steam in the wells that these wells will produce well over 100 barrels a day. All we need to do is we need to control the sand. So we're going to be installing 6 to 8 sand control units or screens in these wells, which we think will take about 2-3 months, steam them. And I think very rapidly between, I'd say 7 to 10 wells, we can achieve that 500 barrels a day, which allows us then to really expand. We're expecting to do about 4 wells a month at this current rate here. What is critical is that we control the rig, we control the people. So really our costs are all internal. We don't need to go to to other service companies to use the equipment. So really it's at our own schedule and not at the control of somebody else here in any case. Now, I noticed one question there about operating cost. So again, because the natural gas price is so cheap, they're only about $2.50 per MCF. And we expect, well, based off Texaco's work, our work, we expect to use less than 1 MCF of gas. The operating cost of steaming will be less than about $7, with the water processing about $10, and then really little or no capital costs. Is that correct, Steve?
That is correct. It's definitely less than $100,000, right around $80,000 per well for the sand control, rods, pumps, tubing, and the drive for the pumps.
Correct. So I think it's a fair statement to say that pure operating cost is sub $12 to $14 per barrel. And with capital and with royalties, our production cost altogether should be less than $25 a barrel.
Correct. I think that's pretty easily demonstrable.
Correct. Now, this is critical, ladies and gentlemen. Once Trinidad has a very nice type of tax system or royalty system. If oil prices are below $80, the royalty actually goes down by 10%. Is that correct, Steve?
Yes, that is correct. There's a relief valve there that if it drops below that, a 10% reduction on the royalty to the state.
So the key for us is we always want to be the lowest cost producer. As oil prices go down, many people will shut in. Our cost of production will go down. But what's critical is the demand for asphalt, the demand for carbon neutral fuels or clean fuels, the demand for offshore will continue. We are in an excellent jurisdiction which has access to the US, which has access to Europe, and also access to the offshore bunker fuel market. So we have great flexibility in keeping control of our costs and also keeping control of the pricing mechanism itself.
Mm-hmm.
And by the way, ladies and gentlemen, we haven't even incorporated into this yet the ESG component with the CO2 component. We believe that we will be partnering with a couple of companies that will actually want the CO2, not necessarily for the voluntary market, but for their internal. The CO2 producer out there is actually what we call Atlantic LNG, which is a joint venture of BP and Shell, or rather BG. They are the largest emitter of CO2 in the island, almost 10 million tons. And this is becoming more and more of an issue. We believe not only can we get the benefit from the CO2, reservoir-wise, we can have a huge cash stream that would be secondary to all the investors as well. Steve, this CO2 is relatively clean and all ready for sequestration. Is that correct?
No, the deal we have is a great deal. They prioritized initially all of the CO2 to us at pressure sufficient to reach our field. So we don't even have to do compression. We just have to tie into the pipeline. And it is already coming straight off of an amine unit, which means it's already been cleaned out of their natural gas stream. So it doesn't have a lot of any other contaminants in it. And we have the ability to ratchet that up. We're not taking all of their CO2. So there's still more available as we go forward.
Excellent. Michael, any other questions that you have?
Absolutely, guys. So, thank you. This has been super, super helpful going into some of these details. So this question has to do with heritage and the offtake agreement. How does that work? And, how does the actual like payment of it work between Greenflame and Heritage?
Right now, what happens is there's a person who comes in, we fill the sales tanks, and they have a company that comes out that part of people from the company that come out once a week, and they tag a tank, and then we're allowed to pump it into the pipeline, and then they come back and confirm that amount, give the receipt. The receipts are all tallied at the end of the month, and they pay within 10 days. The only thing that, like I said, it's a voluntary on our part, mandatory on their part. So it's the best situation you can have, that anything we put in the pipeline, they have to pay. And there's a 50-cent charge for doing so, 50 cents per barrel.
And how long have you guys like been in a relationship with them along these lines? Like how much experience do you?
The original or this field who are still in here for percentage, they have been doing this for 22, 23 years, and have told us they've never missed a payment. We were there through the worst time in their history, where they completely reformed the company. They, originally were Petrotrin, and they broke their union, which their cost of oil refining had exceeded what the price they were getting for the oil, and so they had no choice. They closed down their refinery, they changed their name, they redid everything, and they never missed a payment. They immediately went from the refinery model to an export model, and during that time there was no interruption in payment. So it was even surprising to me that they would not have some things there, as people were getting moved around and all of those other things. So they had some difficulty at that time with permitting, but their payments still came on time.
That's awesome. Thank you for answering that. With regards to geopolitical like issues and Trinidad Tobago and the local politics there, has any of this stuff that's going on in a political level interrupted previous sales of oil to the national pipeline, to the national oil company?
Not in the history, as far as I know. They've always kept whatever is going on in the background away from it. We've not had any of the people showing up with their hands out. We've not had any kind of underhanded things there, which has been surprising to me as well. They pretty much have a bureaucracy, which seems to prevent that kind of thing. There have been some in the background, somebody getting a preferential lease or something like that. But once you have one, they seem to handle it in a very business-like manner.
Got you. Okay. So with regards to transportation of the oil from the extraction location to the actual pipeline, how far is that? Right now we are doing, for the smaller amount, we have a truck, and it's a total of about half a mile to the farthest well, to less than a mile. There's just a truck that goes around once a day and picks up oil. And we have a pipe already run that we'll put pumps on and start pumping it up the hill. So thereafter we'll just be pumping. Okay.
But Steve, from the main tank battery, there's already a pipeline that goes to Petrotrin and is tied into the main pipeline.
At the sales tank battery, it is directly on the pipeline. That is correct.
So what we are doing, Michael, is for some of the far out wells where we were steaming and we didn't want to contaminate the wells with too much water or the pipeline, we kept a separate tank. But we expect that to change once we get over 500 barrels a day, and we can handle the water more efficiently with the steaming. So I think that will really change in the next couple of months to where the transportation will be almost negligible.
Well, it's already next to nothing. It's just a guy who goes around and does it. It's very simple. It's you can practically see the tank battery for most wells, if we're not for trees in the way. It's just 750 acre field, quite small. There's no cost associated with any transportation. No significant.
There's a wide variety of expertise on the call today. Just give me a big picture, 50,000 foot view of Trinidad Tobago, their oil and natural gas resources, and then this formation, this onshore formations, conventional wells, and how it all came about. How did you guys have the opportunity to scoop up these assets? Like, just give us a high level.
At the highest level, I keep my plane next door to the original owner of this property. And the very first time I ever met him, he said he's one of those grass is always greener guys. He originally owned tens of thousands of acres in the Permian, and he sold it before it was worth anything. And to buy acreage in Trinidad, then he set up the entire thing and realized that he had sort of been neglecting it for other projects. And that's why he had just been happy with a couple hundred barrels a day for most of his life on that property, and had not brought it even close to the potential it would ever see. And so we started talking about it, and that's where this project came from. And in looking at Trinidad, it was one of those that the majors showed up in the beginning, started onshore, and we're doing what we're about to do. There was a plant right next door on the
within our field.
But you're correct. It's within the same field, though it's geologically sequestered by a fault. And they ran a long-term steaming operation there and got extremely good results, averaging 100 barrels a day per well for the entire time. We're able to recover almost all the oil, and it was about 5 years, if I believe, David.
That's correct. That's correct.
Yeah. And but then they found the offshore ones, and rather than drilling 10 wells for 100 barrels a day, they could drill one well for 2,000-3,000 barrels a day at 20 times the price. And for the majors, that seemed like a better deal. So they left this stuff behind.
And the other thing, Steve, was at that time, natural gas was not as prevalent on the island as it was now.
Correct. That is.
So I think really, Michael, what this is Trinidad is an extension of the Venezuelan Faja, really. It's so close to Venezuela, to those massive reservoirs. It's a very large deltaic environment. And really, the real question one has to ask is, where is not the oil? So really, oil is everywhere prevalent on the reservoir, on the island. Texaco was very successful out there and had some big plans. And then after they merged with Chevron, they kind of went to some other core assets. We came back in there with my history with Texaco on the island. I knew about a lot of this work, and with Steve's help, we incorporated his surface technology, my downhole, and here we are today.
That's great. I love the story. I love the enhanced oil recapture component of it. Let's drill down on that for a second. Oil, traditional, carbon-based products, not the most popular, topic these days in a large part of the world. Nobody likes the fact that we're paying over $5 a gallon for gasoline. But talk to us about, enhanced oil recapture and how the ESG component of this deal sweetens the prospects for what we're doing here together.
No, we agree. This is it's a really good project, and it's one of the few that is basically, it's not shovel ready. The shovel's already been dug, done the digging, and we're ready to kick off the ramp of production. There's current production right now. We just need to take and multiply it by putting steam and CO2 downhole to bring that oil back at a much faster rate. It's basically as straightforward as it is.
All right. So as Jeff mentioned, the target date for the go public is October, November of 2022. That's coming up here in a short amount of time. You priced this early round at a very, very, very nice price, given the amount of investment that's already been put into this actual project. But if you can, if somebody would like to talk to the actual deal itself and what the investors that are considering putting some capital in should expect from a timeline as well as return perspective. Obviously, whatever said doesn't guarantee a result, but in your experience, what's the timeline? What's the types of returns, and how should investors be looking at it from their perspective?
Yeah, so as I mentioned, we do have a comp called Touchstone, trades on Toronto Stock Exchange in London as well, at about $300 million market cap. So, and their economic model is ours is far superior, both from a royalties perspective as well as a asset ownership perspective. So we think that in terms of our comp with Touchstone, that we are far superior in terms of an asset, and we have a far superior team as well. So if you do the math on that, as I mentioned, they're at a $300 million market cap today with tremendous liquidity. They're a great story, and we're super focused on one thing and one thing only. Number one, getting to market. When I say getting to market, getting trading, but doing it at 500 barrels a day, if not greater than that. So that's kind of our focus. And look, we're super excited at this opportunity because, as Stephen said, we're not shovel ready. I mean, we're ready to go. I mean, we're producing today, and it's just a matter of being able to accelerate the opportunity of extracting oil using our EOR process here. And to David's point, it's ready to go. We also have a great banking relationship in place today with a top tier banker. And ultimately, our goal is post RTO is prove the economics, prove the model, and ultimately accelerate that to David's point again earlier, where there's a number of wells that we just want to get to, Michael, and everyone on the call here. So we're excited about the growth potential. And last but not least is that there's other adjacent properties that we can acquire as well to continue to accelerate. So this is going to be a tremendous growth story at $25 a barrel. We think that our costs are, and that being our cost, is very, very attractive. And no matter what the oil climate is in terms of the cost for WTI or oil in general. So we think we're very well positioned there, Michael, and everyone on the call. So we're excited. At $25 million pre-money here, we think that this is a great value play. And to David's point and to Stephen's point as well, is that the dividend alone on this is going to be tremendous. So we're positioned well here. We hope.
Jeff, can I just say one thing? One of the things other than our cost and all that is what is critical is that we have also completed a Nether and Sewell report on reserves. And that has demonstrated some very robust numbers of over 25 million barrels of 1P reserves. On an asset value, people can do their own calculations. That would be very high NAV value for the corporation here, number one. Number two is this is just the start. This is only 100 wells. Steve, you and I believe we can get this to well over 1,000 wells. Is that correct?
Yes, there's at least 3,000 target wells. The other comparable company that you talked about, they have a different model. They drill expensive wells, and their best day is their first day. So they go out and they announce what their production rate is on day one, and then it declines from there, and they don't usually make those announcements. And we're sort of the opposite. Ours will grow over time with these wells, and ours stay on at relatively high rates throughout the entire life of the well.
That's correct. Now, I do want to emphasize to everyone here, is that unlike a lot of companies, why we want to wait for going public is we want to be cash flowing positive, which we are. So this is a company which will not beg to investors to pay for payroll or office or anything. We already are cash flowing positive. And between Valcor, myself, and others, we have already personally invested $5 million into this business and will continue doing so to make sure that we deliver upon our promises to the market.
Yeah, this one is a high priority. Our own money is in this, as well as close business associates and friends. So there's no way we're going to let this one fail, and we're excited to push forward.
So guys, I know that you only gave me 15 minutes today and I went way over. I'm sorry so much about that, but do you mind if I keep asking some questions? Like, is there a way that we can continue, or is
Sure.
are you out of time at this point?
Sure.
All right. So, I'm in, Miami, Florida. I understand, being in the region, Trinidad Tobago is, they count on their oil and natural gas, revenues as far as the country is concerned. It actually makes it a very like wealthy place. But I don't think everybody necessarily knows that about the actual country. Can you just put into context how big they are as far as size is concerned with oil, with natural gas, and how important this is to their local economy?
I believe it's the export is 50% of their economy. Their total market, their GDP it's more than 50%, and they're the wealthiest of all the island nations, as I understand it. And I'm trying to remember all the other statistics, but it is their primary business is oil. As I said, the entire southern end of the island is one big blob of oil from the surface on down. People live on it, everything, and it's the part that they have tried their very best to get right. It's still an island country, and they have a lot of funny politics and the like. But they, in our experience so far, they have maintained order, and they have not done anything to alienate people. So you basically are getting access to something that looks like Venezuela without all the problems of Venezuela.
That's correct. And again, the country is the 6th largest producer of gas in the world. It has a reserve base of well over 7 billion barrels of oil and around 17,000 wells. With Texaco and Petrochin, they were focused on oil, but that expertise kind of disappeared with EOR about 20 years ago. And really, with what happened with oil crash and the gas, they've been in a little bit of a recession. And now with where oil is going, they have tried to promote and support the oil and gas business. What is critical about us, unlike the others, and Steve, you may want to touch upon this, is we own the license. We do not have a PSA with someone else. So for us, we're 100% owner. And so we don't need to get permission from our partners, as they say.
Got you. So, David, you've been in some roles at some very real big companies like COO Ivanhoe Energy.
That's right.
You've worked at Baker Hughes and Halliburton. Have you had experience working in Trinidad and Tobago?
Absolutely. Have worked there for well over 10 years, both, I guess, from a political point of view. As Steve said, I've never seen a sense of real issues there. The biggest issue is they're just a slow, very highly administrative country. So very transparent, but you've got to follow the rules, and you've got to go and follow the, kind of the stages that they do. Fair enough. Number two is what I enjoy about Trinidad and Tobago is it has a culture of oil and gas. So you have rigs, people, equipment. So if we need an emergency, we need to get something out there. We're not in the middle of Nigeria, or not Nigeria, but rather Namibia or Peru. We have the local equipment available. So really, we have that ability to adjust or to solve problems very quickly. Number three is because of its geographic locale close to the US and other areas, again, we have none of the issues with transportation or logistics. So from our point of view, it's a great jurisdiction, as they say, location, location, location. What I enjoy about the reservoir, or rather the island, is that really the reservoir is quite simple. It's 1,000 feet deep, 200 feet thick, great permeability, great porosity. If this were in Canada, people would be jumping all over this, or California. For me, it's a model of an ideal heavy oil steam flood reservoir.
Got you. So basically, you know, what David's saying, for those of you that are not familiar, is it's a straightforward process to make these reservoirs produce more barrels of oil per day. So from a financial model perspective, the way that it's currently working, how many barrels of oil per day are coming out of the ground at this stage of the game, pre your enhancements, pre the investments in making these reservoirs more productive? Like, what's the size?
It's right now it's under 200 barrels a day from about 60 producing wells. And that's because the enhancement has not been done. And so they're only getting typically 2 to maximum, 4 barrels a day. There are a couple of odd producers that produce a little bit higher. And then we'll be entering those wells and doing multiplication. It generally tends to be that you get, 4 or 5 times for injecting steam, and you can get another multiple on top of that, compounding multiple if you add CO2 to increase the overall well pressure. And so that's where we get to, our model, the electronic model we did actually predicted well above 100 barrels a day, sustained average over 6 months. We're not going to predict that, but we think that, in the 40 to 50 barrels a day range for each well that we hit seems pretty reasonable.
So I want to also stress these are conventional wells, right?
Yeah, they're conventional vertical wells. There are 11 horizontals there. We've found they've been more difficult than the vertical ones because one of the other things here is we have a very thick pay zone. It averages more than 100 feet thick. So you don't need to do a lot of horizontal excursion to try to get more perforations into the formation. That's plenty. And there's, like I said, as simple as can be. They were easy to drill. They're easy to put in. A new wells only take about a week. There is a 2 well requirement over the next couple of years that we have to add 2 more new wells. But expectation on those wells is about $300,000 to do them.
So guys, here's a stupid question. A lot of oil and gas deals go through Houston, then they go through Dallas. How did the people on the call today get the opportunity to invest in such a great deal?
Circumstance of people I guess, that we know you. And is the primary reason. We are not necessarily, centric to any particular location. We like your group, and we thought it was a pretty good fit.
So
outside of going through you, Michael, obviously your group would be, but so if you want to funnel the conversations to us, that'd be amazing. Second of all, is that look for us on the Go Pub, and don't have the symbol yet, but we're going to make a lot of noise, a lot of great noise, and we're excited about this. We've got a great capital markets team. We're going to spend a lot of time in developing the capital markets and the liquidity, and that's just really getting the story out. So doing non-deal roadshows and deal roadshows. As I mentioned, there'll probably be a deal once we go pub. There probably will be a raise if need be. As I mentioned, with a top tier bank. But look, at the end of the day, it's a great story to tell, and we're just going to keep telling it over and over and over again. And I think it's going to resonate with our current shareholders and our future shareholders. So we're excited about this opportunity, and we hope to get some of your folks in here early, just because the folks that get in early get rewarded, and ultimately, we think again this is just a great asset with an even better team to manage it. So we're excited, Michael.
As well as I think it's great timing for you guys, and I'm really excited for you. I'm happy to have you guys as members of FLIA. So we are at 12:03. I want to be respectful to the people on today. I want to be respectful to you guys. I know that you told me at the beginning that, hey, we're going to talk for about 15 minutes, and we're an hour and 3 minutes in. I don't want to let you guys go. I got like 50 more questions that I got like emailed to me from people. So with that said, we will be following up with the recording of today's webcast. We'll also have some materials. We'll be communicating with you. I'll give you contact information for the team. And if you have any questions, you can always hit me up, ask me any questions. If I have answers, I'll answer them. If I don't have answers, I'll get them for you. But guys, I appreciate your time today. Stephen, David, Jeff, thank you for coming on. I look forward to having you guys back, and good luck, best of luck with this. I think this is going to be a great investment.
Yeah, and on behalf of Greenflame team, Michael, we want to thank all the folks that joined the call today on this exciting opportunity, and ultimately hope to see some participation. And you can visit us at greenflameoil.com. So thank you again, Michael. What a great platform. And we look forward to updating you on our progress in this very exciting time as we're coming out hard.
All right, guys. Thank you so much. Have a great day.
Thank you.
Thanks,
All right.
guys.
Bye now.
Bye-bye.